Every week, we decode the macro. First, we check the Bitcoin macro and liquidity regime, my custom trading view indicator, tracking liquidity, inflation, M2, the dollar, and momentum across global markets. Then we hit the strategy, my Bitcoin macro playbook, which answers the question, are we risk on or are we risk off? Finally, we cover what data just dropped. CPI, ISM, rates, jobs, cutting through the noise so that you don't trade blind. Happy Friday, everyone. What a week it's been. This is my favorite day of the week. As always, I'm super excited to get into this week's Bitcoin macro war room. Without any more intro fluff, there's a lot to go over. A lot has happened this week, and hopefully I can lessen some fear out there and give you some hopium. So let's get into the data. Let's start with the chart as we always do. So for the global liquidity, the regime tracker anyway, you can see down here, we're still teasing this lower bound of the box. We've had a full reset now. I mean, you can see the price has reflected this. We have a 51% air gap with the global liquidity tracker. The 30-day correlation sits at currently negative 36%. Which is the highest negative deviation since I started tracking this. And I've done some work outside of the war room, and Bitcoin has been heavily correlated recently to the Nasdaq in US stock market. So something to note, I think when Nasdaq finally bottoms, that's when we'll see a turning point for Bitcoin. But in terms of the actual indicator itself, we're still in expansion, which is good. We still have a good score. And again, we've kind of reset the sentiment here. Global liquidity is still trending up. There hasn't been any major downward revisions. So long term, everything still looks good. I think this will catch up at some point, probably at the end of Q4. We'll see if that actually happens or not. But let's take a look at this week's data releases because we had a storm of data. So we'll start right from the top. New home sales don't really care about. Core durable goods did come in hot at 1.1%. This basically measures investment in long-lived goods, basically excluding aircraft and defense. It's a cleaner CapEx signal. It's important because stronger CapEx equals resilient growth and profits for companies. A big beat here does cool rate cut odds and props real yields and the dollar. It does tighten liquidity a little bit. It's less easy money flow. So not a great thing, but a good thing for the economy overall. And I think with the ISM and PMI still below 50, this is still a positive signal. Richmond Manufacturing Index, which is the next one, did beat also, not by a lot, but came in at -7. The forecast was -11. So you can see this is trending up. This is good for the ISM. For whatever the next print is. I think it's this coming month here in September. Consumer confidence did beat as well, although not by much. This is a survey of household views on current conditions and outlook. It matters because confidence drives spending, which drives growth, inflation, et cetera, et cetera. The next big one is GDP, which beat by 0.2 points. This is the broadest scorecard on U.S. economic growth. It's the second estimate. It's crucial because growth momentum sets the backdrop for everything. Earnings, rates, policy. Hotter GDP does support higher for longer in terms of interest rates. It's a short-term headwind for Bitcoin, but I think the Fed still has to cut. They're already behind. And we will take a look at the Fedwatch here in a second. Pending home sales, I really don't care about. Unemployment claims did come in a little bit under, although this has been revised a lot. So I wouldn't be surprised to see a revision here. And that's pretty much it for the data. Let's take a look at the Fedwatch and see what the odds are. Last time I refreshed this was 87.2. So we'll see if it changed. No, it has not. It's still 87.2. So pretty much a lock for a cut on the 17th of September. The probabilities, I don't think, changed much. There is a 44% chance of them doing another cut in October, and then a 37% chance of them doing another cut in December. So that might be 3 cuts by the end of the year, but we'll see how this kind of plays out as more data comes in. Now, we'll move on to probably everyone's favorite portion, my actual system here. and what it's showing. So let me move my camera over really quick. You can see the big thing first off is that my Bitcoin macro overlay did shift risk off, which you can see right here with the red bands in the background. And I think we have some more downside. I did some short-term analysis. I posted some tweets on my X. The MACD isn't looking great. The RSI is in a downtrend and had a bearish divergence. I think we actually see some lower prices before we really see that next push up higher past 128,000. That's also because a lot of people have been going long on leverage around these prices and getting wiped in the chop. So I think there's still a little bit more downside to go. If you do have any cash on the sidelines, starting to DCA now would be a great idea. This is not financial advice, but let's take a look at the rest of the system. I think last week we were 93% risk on. We are now 88, and that is just because of the global liquidity M2 is currently bearish given the chart. Otherwise, everything here has stayed the same. And I did add some inputs here. So I added the BTC DXY inverse correlation. I got rid of one of the other scores that just was not a good indicator. It has not done well. So we adapt, we iterate, and we keep moving. Everything else looks good. All of my institutional research is still extremely bullish going into Q1, Q2 of next year. This is what I weight the heaviest in my system. Obviously, I can't share what it is, but know that the institutional macro research is still bullish. With that said, let's take a look at some of the on-chain data. So we'll start off with, I've redone this a little bit so it makes more sense. It aligns here with the system. So we can take a look at these one by one. Bitcoin bull bear market cycle indicator is still bearish here in the blue. And I think this will unfortunately continue for a little bit, but we will see how that plays out. For the MVRV score, this is still bullish, which is a good sign, although I don't think it's updated. I did refresh this morning. I don't think it's taken into account these lower prices. I don't also think that that would have changed much in terms of the indicator. Realized price short-term holders, still bullish, still green, which is great to see. This is the new signal. I love the inverse dollar correlation. All this means is that when the dollar is going up, historically, Bitcoin goes down. When the dollar goes down, Bitcoin goes up. This is a great chart. You can see when the background is shaded gray, it basically means that the signal is on, meaning the dollar is weakening and we should expect higher prices over a long term for Bitcoin. So this is still signaling. Therefore, it got a positive score on my system. As far as all the other metrics, this is one I'm looking at as a potential for an input, but I haven't decided yet. For the Sharpe ratio, nothing much has changed here. Adjusted Nupal, same thing. This is one of the old indicators I used to use on my system. It's still bearish. It's been bearish since I started this video series. And yeah, I've removed this. I don't think it's good enough to be in the system, so it's been pulled. Long-term holder net position change, you can see is still in the red while retail is still buying. So again, this is one of the reasons I think it's still a little early. We probably have a little bit more downside to come before we really do see that next leg up. And it does align with the seasonality, which again, I don't really love doing seasonality on Bitcoin just because there's not enough data in my opinion, but it is lining up this year. Sopper is cooling off, which is good to see. Retail investor has plunged back into the red, which is also really great to see. Over-the-counter address cohort balances have spiked up a little bit, and smart DCA is still signaling that this is a good area to DCA. That's pretty much it for the on-chain metrics. So let's get into the sort of final section, some of the fun stuff, and we will talk a little bit about some tweets and some of the news. So I've put together an OpenBB dashboard here. I'll actually move my camera, I guess, top right makes more sense. So I put some notes here around some of the actual news. The Fed, this is the big one. The Fed cutting in September while the ISM is still below 50 is super bullish, in my opinion. Once we get that expansion, that sort of post above 50 run up to the mid 50s to 60 in the ISM, that is when you will see the biggest returns, the craziest returns, the real alt season. That's when it'll be happening. So keep an eye on the ISM. Sustained DXY downtrend. Again, this on-chain signal is still signaling. DXY is still in a downtrend. The dollar continues to break lower, although it has bottomed out a little bit in the short term. for the next one, balance sheet or issuance surprise. So Fed liquidity adding, meaning a Treasury duration pivot, could be a tailwind. And there is some data around this. If you follow Thomas on X, he's really good at doing kind of analysis on the TGA and RRP flows. So some more short-term headwinds probably in the cards here. Japan normalizing and doing intervention. Again, a weaker USD JPY pair mechanically pulls DXY lower, which is a stealth macro catalyst for BTC. This is really good, right? So the bottom line here is the past week nudged the regime towards easier policy, decent growth. So unless we sort of reignite inflation really hot, I think the Fed will cut and continue to cut. Don't forget that Powell's term is ending and he will be replaced with a dovish sycophant that will probably continue to cut rates to zero. I wouldn't even be surprised if they go negative at some point. Hold me to that. Anyway, some of the news here, U.S. Treasury buybacks, that they're going to double the frequency of long end nominal buybacks and increase the size of cash management buybacks, all aimed at improving liquidity in the market. So this is positive. Powell here says Fed may need to cut rates. We'll proceed carefully. This was sort of post-Jackson Hole speech. We all know what happened. He's going to be cutting rates. Let's get into some of the tweets. This one's great. Just gives you some kind of framework for how far we've come. Bitcoin was $379 when this article came out in 2016 from the Washington Post. RIP Bitcoin, it's time to move on. This definitely didn't age well. RIP to that guy's bags. Another tweet here from ASK32. In past cycles, Bitcoin marked a major low in September, then rallied for 2 to 3 months into Q4. Again, this aligns with my short-term outlook, meaning we could see lower prices into September before we really get that next leg higher. And I think by then the ISM will start pushing past 50 and up into the low to mid 50s by the end of the year by Q1. We'll see if that actually plays out or not. Dan Hillary, I had the honor of having him on a podcast of mine. He's incredibly smart, runs a Bitcoin hedge fund. So definitely follow him if you aren't doing so already. Great quote here by Howard Marks, who is someone that Buffett respects. So, put some respect on that name. You make the big money catching falling knives carefully. I always hated the don't catch a falling knife metaphor because that is when you make the biggest gains. If you have a thesis, if you know things are going higher over the long run, you want to be catching a falling knife. Just again, with caution and do it carefully. Flying Raven here, there's an old saying, the market is more likely to wear you out than it is to scare you out. This has definitely been true, especially for the price action since, I guess, really the beginning of July or the mid-July. I mean, we've been in this sort of terrible zone of chop from mid-July till today, where we've basically retraced to where we were in May of this year. So kind of crazy, and the market will wear you out. It is not your friend. It is there to take your money and test your conviction. So you got to be patient. You have to have a long-term thesis. Another tweet here from Ottavio Costa. Foreign central banks now officially hold more gold than U.S. treasuries for the first time since 1996. Countries know what's coming. They are using gold as a debasement hedge. That is going to continue, and I think that will flow eventually into Bitcoin because gold is, well, it's an old shiny rock, but it is hard to transport. It is hard to hold. It is not something you can send someone overnight in 20 seconds and send them $1 billion worth of gold. No, there's a lot of operational security that needs to happen, transport of the bars. I mean, that's what Bitcoin solves. That's one of the things Bitcoin solves. So for that reason, I'm still very bullish going into 2026. That's the wrap up for this week's Bitcoin Macro War Room. I really hope you enjoyed that. If you made it this far with me, thank you so much for watching. I'm not even going to ask. You know what to do. I drop these every Friday morning. Try not to get too bearish. Look at this as an opportunity. If you really want my short-term target, it's about 104,000, I think, will hopefully be a bottom entry opportunity for the next leg up, because in my mind, 128,000 plus by the end of the year is a shoe-in. We'll have to pull the receipts, see how Q4 plays out. Again, not financial advice, but thanks for sticking around. I'll see you next week and have a great weekend.